Welcome to the internship. So let's just start this session now. So my first question to all of you is, what do you think is trading psychology? Like, you have been in this profession of trading and you have been learning about it. Even before the internship also, you were in contact. What do you think is trading psychology? Yes, it's the mindset, but what exactly it is? It's not just the mindset. There's a lot of things that are involved in trading psychology. So let's just start this session. And I'm sure after this session, each one of you will be able to answer this very basic question, that what is psychology? So answer me this question. Do you really think trading is all about technicals and fundamentals and nothing else? Like, you have learned about the technicals and the fundamentals from Parasar. Do you really think there's nothing else in the market? So the first and the foremost thing that I would like to tell you is that fundamentals might tell you what to trade. Like, the fundamentals or the news analysis or any kind of a fundamental analysis from a financial point of view will always tell you what to trade into. Like in stock market or even in forex and a crypto market, you need to understand what you need to trade into. So any stock that is very fundamentally strong is something you should invest and trade into. And like in trading, it is about the volatility, the stock that has more volatility. So all these things are told to you by the fundamentals of that particular financial instrument. But the other thing is when to trade. You can't enter into trade every time. So important thing to understand when to trade is the technicals that Paras sir must have taught you throughout this internship. And if you have gone through our YouTube channel, you must have seen a lot of videos of him explaining you the technicals. So the technicals might tell you when to trade, what is the right time to get into any trade and execute that trade. It's good to buy good stocks, the fundamentally strong stocks, but you don't have to buy on the all-time highs. You have to buy when they are at the discounted prices. Similarly, in the forex and the crypto market as well. So it's important to know when to trade. That is something that will be told to you by the technicals. But even if you have learned the fundamentals and the technicals, the most important thing is your trading psychology, because that is something that will decide how you will trade. You might be a very good expert at the fundamentals and the technicals, but you may lack the discipline. You may lack the consistency to apply that setup. Like the technical training always gives you a setup or a strategy that you need to follow in the live market. But if you are in not the right mindset, if you are not consistently following those rules, then you won't be able to be a profitable trader in the market, because that's what the principle says. Any strategy which has a good winning ratio can only be successful if you apply it consistently, if you don't let your emotions enter your mindset. So this trading psychology, you might not have found many videos on it, you might not have seen many trainers or traders talking about it much, but this is the most important thing in trading, because this is something that will always decide how you will trade. What and when can be understood by the fundamentals and the technicals, but the decision of how you will trade will always be made by trading psychology. So it is very important to actually understand what is trading psychology. So in this session, I'll be explaining you in detail about what trading psychology is, how traders are influenced by it, what are the emotions that might come in between your decision making process as a trader. There are a lot of emotions that we feel in everyday life, but in trading, what are those emotions that impact you more than the other? It's important to understand them. Secondly, I'll be giving you a lot of recommendations, psychological recommendations on how exactly you can become a successful trader. You can make sure that you are consistent in the market always. Moving on to the next, this is what is trading psychology. Like, I asked you the first question itself, what is trading psychology? So all the ones who are not able to answer it, please go through this once. Trading psychology refers to the emotions and the mental state of the traders and also the market. It's not only the traders, it's also about the market. You must have heard people saying that market is all about emotions, and you have to understand the emotions of the market as well. The market is sometimes in a fearful position, and you have to take your trades accordingly. You can't walk with the wind, you have to take the opposite trades. This emotions and mental state of traders in the market helps to dictate success or failure in trading. This is something that actually decides whether you will be successful or you will be a failure in trading. You must have heard 95% of the people fail in the market. The only reason for this is they are not catering to the trading psychology. They are not looking onto their mindset. So let's start with the most important part of this session, that is all the main emotions that you need to understand and control as a trader. See, as a trader, the very important part about trading is understanding your emotions. Once you understand your emotions, it's very easy to control them. Trust me, I have seen my clients being able to control their emotions way too easily. But the important thing and the most difficult part is understanding those emotions and why those emotions are affecting you. What are the trigger points of that emotion? You can't be greedy all the time, but there is some or the other trait that actually makes you greedy. So you need to understand what that emotion is. And to be able to understand those emotions in your underlying trading, it's important to understand what these emotions are altogether. Like, we have heard about all these emotions: fear, greed, ego, regret, all are like, but we need to understand how they relate into trading. So now I'll be taking each and every emotion individually, explain you the actual concept of it in trading, and also give you a little scenario of each emotion so that you're able to understand how exactly these emotions affect you as a trader, so that the next time you feel, or even if you are in that particular scenario while trading, it's easier for you to understand what that emotion is, and at least be able to recognize those emotions in your trading. It'll be too much to ask for to be able to control it, but yeah, of course, you can at least start recognizing it with the examples that I'll be giving you. So let's just start with the first emotion, and that is fear. Literally, fear is a natural emotional reaction to a perceived threat. You must have heard about this. Dar lagna, fear, is all about the emotional reaction that we have, that we feel threatful about some particular situation. हमें किसी चीज से डर लगता है, तब हमें वो इमोशन आता है fear. So किसी भी situation में, not even in trading itself, even in your life as well, psychologically what happens when you are having an emotion like fear? You are in a situation of fight and flight. आपका दिमाग उस हिसाब से काम करता है कि या तो वो उस सिचुएशन से डर जाता है और उसे लगता है मुझे भाग जाना चाहिए, या उस सिचुएशन में डर के उसे लगता है मुझे फाइट करना चाहिए. These are the only two reactions that our brain thinks of when we are in a fearful situation. जब भी हमें डर लगता है, हम दो ही चीजें कर सकते हैं: या तो हम उस सिचुएशन से भाग जाएंगे, या हम उस सिचुएशन से लड़ेंगे. As a trader, like in situations of your life, there are different ways of actually reacting to these two fight and flight emotions. But as a trader, most of the traders opt for flight. They want to run away because they don't have the confidence. They don't have that much strength or the confidence in their particular trading, and they decide to actually run away from that situation. वो उस situation को लड़ ही नहीं पाते. Like, if you talk about a professional trader, even if market is making opposite direction candles, he'll still be able to retain to his position because he has the confidence. He is ready to fight the market and not run away from it. But if you see a novice trader, if he has bought a position at one particular point and he even sees one single red candle, he gets fearful and closes his position because he doesn't have the confidence of fighting the market. So fear is a very prevalent and a very important emotion, and fear is one of the emotions that is actually driving the market as well. Like, fundamental news influences on trading is mostly because of this fear. People are fearful of various newses and fundamental concepts that they start taking opposite direction trades. That is mostly because of fear itself. So let's take a scenario. I hope you must have understood what fear is and how a trader can feel it. The fear can be of many types. The fear can be of losing your profits or losing your like making losses as well. There are a lot of fears, a lot of situations, but let's just take one scenario to cater to right now. That is, when trader experience anything against their analysis, they naturally get scared. They may overreact and feel compelled to cut the winning position. So there are three situations that can happen whenever a trader is taking a trade and the market is showing opposite direction to that particular trade. So either the person is compelled to cut the winning position. Like, as I said, a person bought a trade and he saw a small red candle. He was so fearful that I'll also lose this much of profit that I made, that he'll cut the position. So either he'll cut a winning position that would have gone way too high, but he doesn't have the patience or the confidence to stay in that position. Secondly, he might hang on to the losing trade as well. As I said, fear can be on both the sides, even on the winning and the losing. On the losing side, you might be fearful or accepting the loss. Like, the market is going in the opposite direction, but you have the fear of accepting the loss, and there are clubbing of emotions here. You have that hope that the market will go in the same direction as you thought, even after this reversal. So you hang on to a losing trade as well because you fear of making losses. And the third is hesitation to take the trades. This is mostly when you are a novice trader, you don't have much knowledge, you don't have much learning about the market. That is when you actually hesitate. The hesitation is mostly at the initial stage. At the later stages, hesitation is a lot less. But sometimes, even between the career of the traders, sometimes when they are changing their strategy or they forget what exactly they were doing or how they were profitable, sometimes during that time as well, they also get hesitated to take the trades because they fear that our knowledge is not good enough, we don't know good enough, we might be wrong. And these all concepts are the part of fear itself. So this is a very important emotion, and that's the reason I've taken this at the very first step. Because if you understand what are the situations where you are feeling fearful, it'll be easier for you to combat and get out of those situations. Try understanding the triggers behind your fear emotion. I hope everyone has understood what this emotion is and how it can affect traders. If yes, just let me know in the chat box. Okay, so let's move to the next emotion, and that is greed. So you must have heard everyone talk about greed in relation to trading. And it's not wrong as well. Like, you are here to make profits, right? So how do you define what is greed and what is not greedy, right? So according to the literal definition, greed is a disappropriate desire for profits. That is, you are greedy to have more profits. This is the most common emotion in trading, as traders are here to make profits. As I said, you are all here to make profits, to make consistent income, to make more money, to have a second income. All these things are your concepts. But the baseline is that you want to make profits, right? And it's very difficult to decide how much profit is good and how much is too much. There's a very fine line between normal profit and greedy profit. And that is the reason most of the traders get caught up into this, because they don't understand whether this profit is actually the genuine practical profit they should expect from trading, or is it their greedy profit. Like sir must have taught you all the strategies, one is to two strategies, right? With a risk reward ratio of 1:2. But when you are in the market and trading, and even if sir has said that you have to liquidate your stocks after it has reached 1:2 risk reward ratio, you might still stay in the trade because you have that emotion of greed that I can achieve 1:4 in this setup. And that's the point. That's the only difference of trading. That if you are a consistent trader, first you need to find out a strategy and decide what kind of a risk reward ratio you want to have for it. Decide the targets. Don't ever take a trade without deciding what is your target and what is your stop loss limit. And once you start making your trading based on these rules, these emotions will vanish automatically. So greed can always come in between if you have not decided your targets. So always decide your targets before itself. And if you want, you can follow the trailing stop loss concept as well, as sir has taught you. That's also very beneficial and actually overcoming greed. So let's take one scenario so that it's easier for you to understand. Greed emotion can force traders to hang on to a winning position. As I said, 1:2 से 1:4 भी जा सकते हैं. You always think about that, right? ये इसीलिए होता है because you are greedy in that particular situation to get that one last penny. But sooner or later, the trend reverses and greedy get caught and trader bears huge losses. This is something that happens a lot in the market. You must have listened that institutions are manipulated, they are taking our stop losses. It is nothing like that. They are actually taking advantage of your emotions like these. If you are staying in a position way too long than you should, then you are giving them a bait that come get me, get my profits as well. So always stick to your rules. That's the best strategy that you can follow. And always be consistent once you have decided something for yourself. Coming on to the next emotion, that is hope. The only thing that separates trading from gambling is hope. In gambling, you have mindless hope. If you have played cards or any other casino games, you must have realized you are just gambling. You are not calculating. You are not doing any calculations or stats or anything. You are just gambling on that number, that I'll get this number, so I am rolling the dice and putting my money. But trading is not like that. If you learn the proper skills of trading, if you are learning the proper technicals and the fundamentals and calculating everything, like sir has given you a very beautiful session of risk management. That's all about the calculation. That's not guesswork. You're not guessing whether the market will go up or down. You are doing proper calculations. You are using indicators or market structure or price action, whatever strategy you want to use. Anything that you're using, you are applying a lot of skills of yours, doing a lot of calculation, managing your risk. There is so much going on there. So the thing that actually separates gambling and trading is hope. You are not hopeful in trading, you are calculative in trading. In gambling, you're always hopeful, you can't calculate anything. So in literal way, hope is a feeling of expectation and desire for a particular thing to happen. And this hope can actually be a positive emotion. Like in real life, psychologically, if you talk about, hope is a very positive emotion. Like everyone says you should be hopeful, you should be optimistic, you should always think good, and all those things. These are the positive emotions, right? But in trading, when the hope is not embedded in the logic, in the calculations, then it can lead to heavy losses. So it's very important to have the hope at the right moment and not every time. Don't be a gambler, don't be a hopeful gambler. Instead, be a calculative trader. Don't hope for it, calculate it and wait for it. If it happens, it's good. If it doesn't happen, that's also good. You're not having a 100% winning strategy. No one can have a 100% winning strategy. It is not possible. There is no holy grail strategy in this market. But whatever strategy, whatever winning ratio you have, stick to it. Make sure you're not hopeful of more than that. Find more opportunities. Don't stick to any particular trade itself. So let's take one more scenario for this. That is, hope of recovery prevents traders from cutting their losses. This is something that happens a lot with a lot of traders. That is, even if they see the market going in the opposite direction of their trade and the price is very near to their stop loss, even cross their stop loss, they are still hopeful that and not ready to accept their loss, and they still hope that the market will go again in my direction, and this is just a small reversal and the market will swing away into my direction. This hope is not something that works with. See, try understanding there is a reason we call a stop loss position a stop loss, because that is the point where we want to stop our losses. We can't bear any more losses at that more than that point. So you have to be very vigilant about what exactly you're stopping at, right? So stop at those positions. Don't hope for the market to go again in the same direction. If you want to hope for it, hope for a new opportunity. Find new opportunities. There are so many setups, there are so many opportunities that you are going to get as a trader. If you are losing in a particular trade, accept it. Don't let your emotions drive your decisions during that time. Okay? Everyone got these two emotions of greed and hope? Anyone has any question in these two emotions? Just let me know right now itself. Moving on to the next emotion, that is regret. Regret is an emotion which can come both ways. That is, a trader could regret placing an order, or a trader can also regret not placing one. This can be both the ways, and it's hampering in both the situations. Like, you can hamper your trading by both the situations. Sometimes you can regret of placing one trade, sometimes you can also regret of not placing one. Like, I have seen a lot of traders always saying कि जब भी मैं मार्केट में ट्रेड करता हूँ तब उल्टा हो जाता है, और जब मैं बैक टेस्टिंग कर रहा होता हूँ या मार्केट को देख रहा होता हूँ, ट्रेड नहीं लगा रहा होता, तब वही उसी डायरेक्शन में जाता है जिस डायरेक्शन मैंने प्रेडिक्ट किया. This is your emotional regret. Try understanding this. Let's take a scenario. It'll be easier for you to understand. In regret, our mind will be clouded with thoughts like, what if I would have placed the trade? Like I said, back testing करते हुए जब आप ट्रेडिंग कर रहे हो तब आपके दिमाग में हमेशा ये चीज आएगी, काश मैंने ये ट्रेड ले लिया था, मैंने कितनी गोल्डन अपॉर्चुनिटी, आई मिस्ड आउट सच अ गोल्डन अपॉर्चुनिटी, इतना अच्छा ट्रेड था मैंने मिस कर दिया. These are all the thoughts that come to your mind when you are in that regretful situation. The second is, I knew this was going to happen. I should have taken this trade. आपके साथ ये भी होगा, जब मार्केट में वो चीज हो रही होगी तब भी आपको लग रहा होगा कि मुझे पता था ये होना है, तो मुझे ये ट्रेड नहीं लेना चाहिए था, लेकिन मैंने फिर भी लाइव मार्केट में ये ट्रेड ले लिया. So this is all your regret emotion. Whenever you are having a personal dialect with yourself while trading, make sure when these kind of statements are there in your mind, then it is the regret emotion that's impacting you. And make sure you don't let any of these inner voice make you decisions. on the next trade as well. Like if you miss one opportunity, you might have a baggage towards the next trade where you carry that missed opportunity baggage on the other trade and take a trade that was actually not meant to be taken. So always make sure whenever you hear these words inside your head, it is your regret emotion, and it's very important to recognize that particular emotion in yourself. Okay, moving on to the next. This has been social these days, that is FOMO. FOMO, the acronym is fear of missing out. What is FOMO? FOMO is a social anxiety. It's mostly a social anxiety that initiates from the thought that others are benefiting from an opportunity and you are missing out on. फोमो हमेशा उस चीज का डर होता है कि सामने वाले या आसपास के कोई भी सोशल एलिमेंट, लोग, सोसाइटी उसका फायदा उठा रही है किसी पर्टिकुलर सिचुएशन के, बी एनीथिंग। इसे ट्रेडिंग में नहीं, ये लाइफ में हर जगह होता है कि वो किसी चीज का फायदा उठा रही है तो मुझे भी होना चाहिए उस पोजीशन पे, मैं भी उस चीज का फायदा उठा सकता। लाइक इफ यू हैव अ बंच ऑफ फ्रेंड्स and they all are partying somewhere, they're going on a party, they're having fun, and you are back home sitting alone, you might be a victim of FOMO where you fear that I should have been a part of that party as well, right? ये situation आपके साथ भी होती है. So this is the emotion of FOMO. But ये trader के साथ कैसे होता है? So let's understand a scenario जिससे आपको समझ आए ये emotion trader को कैसे impact करता है और ये इतना major emotion बन कैसे गया traders की life में. So traders feel urge to get into or out of a trade if they see other experts doing it or listening to news or following social trends, which can actually lead to losses. आपने बहुत बार सुना होगा कि कोई न्यूज आ गई, किसी बहुत बड़े बंदे ने कोई पर्टिकुलर स्टॉक खरीद लिया, तो आप सबको, बहुत लोगों को होता है कि हमें भी ये खरीद लेना चाहिए. या इफ देयर इज वन पर्टिकुलर सिचुएशन, इवन इन ट्रेडिंग, इफ देयर इज वन पर्टिकुलर सिचुएशन जहां पर आपको बहुत ज्यादा लोग ट्वीट कर रहे हैं, सोशल मीडिया पे अपलोड कर रहे हैं या यूट्यूब पे वीडियोस बना रहे हैं दैट दिस इज समथिंग गोइंग टू हैपन, यू हैव टू बाय दिस, you have to sell this. Yeah, even if anyone of your fellow traders are doing it, they inspire you that I am buying this stock, you should buy this too, इसमें movement अच्छा आने वाला है, इसमें volatility अच्छे आने. उन सारी न्यूज़, उन सारे सोशल एलिमेंट्स की वजह से you get that impacted that you also take that trade without your personal analysis. And that is the worst thing that you can do to yourself as a trader, because बिना अपने personal analysis के आप किसी भी trade में enter करोगे, that can actually impact you as a trader emotionally. FOMO के अंदर mostly यही होता है, the time when you enter the trade, because the moment of entering the trade has already passed. That is why it has got into the news. That is how it got to your ears. Entry moment has already passed and you enter way too late. Like if there is a stock that has to go up, the entry has to be at the discounted price. But till the time you hear about it, till the time you take the action of entering that trade, that stock has already gone high above. And when you enter the trade, that's the time when actually the market reverses. Because no stock can go in a straight line. No currency, no financial instrument can go right in a straight line. It has to go like this, right? Market structure that sir has taught you. So FOMO can actually force you to enter the trades way later than you were supposed to enter. Firstly, that is something that can happen. Secondly, FOMO can actually also make you get fearful and enter any trade, like with the suggestion of your friends. Like if you're not trading well and a friend of yours is earning a lot of money out of trading, you just go with what he says because you have the fear that he is making money out of it. He has grabbed that opportunity, I should grab that opportunity too. And this is the emotion that actually impacts a lot of traders throughout their life. Sometimes when you are there is a market that's very choppy and you're not able to get your trades. Like there are strategies that don't give good setups in a choppy market. When you are in that situation, you might get into FOMO because other traders are making profit out of it and you want to grab that profit as well. Don't fall into this trap. It is a social anxiety. You have the key to actually get out of it. Don't fall into this trap. Stick to your rules, make your trading setup, make your strategy, and patiently wait for your setups. And even if you hear something from outside, first and the foremost thing you have to do is to analyze it from your personal point of view. Don't let others give you a biased signal and take trades on it. Always analyze the market first and then take into any trade. Okay, I hope FOMO is something that's, because FOMO is a very important emotion. I have made a particular individual video for this as well. If you want, you can go through that as well, because there are a lot of recommendations that I have given only for the FOMO emotion in particular. Okay, so moving on to the next emotion, that is ego. Being right or wrong is a thing that tends to impact our ego the most. Like, humans are a very egoistic people. We have to accept it. We have a very strong ego as compared to any other species on this planet. But this ego has to be left behind when you are trading. In trading, ego should always be secondary. Professional traders are not emotionally invested in being correct. They are not investing into being correct. They are emotionally investing in optimizing their strategy and gaining most profits and losing the least losses. So, as a professional trader, you don't have to invest in being correct. You don't have to, as I said, there is no holy grail strategy. You don't have to be correct 100 times. You just have to make sure that you're sticking to your strategy. Don't look into that ego mindset that I have to be correct every time. Even if you have one stop loss hit, accept it. Don't let your ego take other revengeful trades. Accept that you had a stop loss and your strategy has the capacity to have that stop loss as well. So just accept it and move forward. Take another opportunity, get into another trade, instead of being in an egoistic position and wanting to prove yourself that you can be right every time. Don't get into that trap ever as a trader. Let's take a scenario that is holding on to position that we hope will reverse and reaffirm our initial judgment. As I said, if you are near your stop loss, you will get hopeful and you will have that ego. No, I was right. I took the right decision. The market has to go up and it will go up. Even if it has crossed my stop loss, I'll still keep running my losing trade as well. This is all because of your ego and also hope, as we discussed earlier. But it is the ego that makes you stay into that position. Don't fall into this. If there is a stop loss, accept it, move on to the next trade. That's really important for you. Okay, so with this, we are done with most of the major emotions. Please let me know, are you clear with what these emotions are and how they can impact a trader in their trading, and how you can actually rectify them and control them in the real life? I'll be giving a few suggestions as well, but till then, first let me know, are you very clear about what these emotions are? So let's see how we can control these emotional driven trading decisions. First is the attitude towards your trading plan. This is a very important thing, and it might sound very basic to you, but this is something that most of the traders don't tend to do. And that is having a very positive attitude towards your plan. And it's not that easy to have a positive attitude towards your plan. So, first and the foremost thing that you have to do is learn and create a proper trading plan and note it down stepwise. Whatever strategy, sir has told you a lot of strategies. You can find a lot of strategies in other setups as well on YouTube or other courses. There are a lot of sources of finding strategies, but always make sure whatever strategy you're learning, it can be defined into a step-by-step process. This process should always be defined in as clarity as possible, and it's very important for you to write down these steps as well for your own self. See, human mind has a tendency of overlapping and adding more knowledge to it. So it's very important to actually define to yourself what exactly your trading plan is, so that after 2 months, if you grab new knowledge, it's easier for you to understand what exactly your trading plan was. Right? So the first and the foremost thing that you have to have towards your plan is write it down in a step-by-step process. And if you come across any strategy that cannot be defined in a step-by-step process, then leave that strategy. Trust me, you won't be able to be consistently profitable in that strategy if it cannot be defined. You might get a little profitable situations, but there is a very high probability that you might lose your capital as well in that particular setup. So always make sure you have a strategy that can be defined in a step-by-step process, and try doing that for your own personal use as well. The second thing is, do enough backtesting for that trading plan to increase your confidence in the plan. See, as a human, you can have confidence in a plan only if you have seen it working. You don't have the time to invest in the live market that much, that whether it's working or not. And you don't have to waste that money as well. So to not waste that money and to not invest those 10 to 15 years of your life just observing the market, what we can do is do the back testing. Go back to the previous data and do the testing, whether that strategy is working or not. There's a replay button on TradingView as well. You can use that as well. That's the best way of actually back testing. When you can't see the future charts, that's the best way. Just go back 2 years, 3 years, 5 years. You can go whenever you want to go back, play the market and analyze the market and make the decisions as you might have made in the real market itself. Make those decisions. और जब आप वो replay करोगे और उन decisions को लोगे, तब आपको समझ आएगा real market में क्या क्या situations बनती हैं. और उन situations में भी जब आप profitable हो पाओगे, that is when you will gain the confidence in your plan. So always when you have defined that step-by-step process, always do the back testing. Have that confidence. क्योंकि जब confidence होगा ना, तभी वो fear emotion नहीं आएगा कि इस ट्रेड में एंटर करूं या ना करूं, या ट्रेड में एंटर कर दिया तब भी ऑपोजिट डायरेक्शन में कैंडल्स बन रही है, तो क्या मैं इसे सस्टेन करूं ना करूं. ये कॉन्फिडेंस ही तब आएगा जब आप वो इनफ बैक टेस्टिंग कर चुके होगे और मार्केट में वो चीज होती हुई देख चुके होगे कि मेरा जो सेटअप है उससे प्रॉफिट होता है. मेरा जो सेटअप है अगर वो सिग्नल दे रहा है कि यहाँ एंटर करना है तो यहाँ एंटर करना है. You have that confidence when you've seen that in the market itself. And the third is perform a mental checklist before trading. This is a very important thing. That is, always make a mental checklist that whenever you are entering into any trade, you have a checklist to take that I have done this, I've done this, I've done this. It can be entering in like the reasons for entering the trade, the reasons for exiting, the reason for putting your stop losses, the reason for putting your target prices as well. Every setup, every strategy has different checklist. So always make sure you have a very small, crisp, to the point checklist ready with you, so that whenever you are entering into your trade, you can just mentally tick those checklists and then enter the trade. This will actually help you control a lot of emotions of yours. Because till the time, as I said, till the time you have rules, you are following the rules, you will never get trapped into your emotions. Okay, so this is the attitude that you have to have towards your trading plan. And this will take time. You have to learn that trading plan. You have to do a lot of back testing. You have to function with this mental checklist as well. Always do a lot of demo trading first and then get into the real account, then invest your real money. You have your hard-earned money. You have to preserve it. And the best way to preserve it is check the market, do the back testing, do the demo trading. And once you start seeing yourself profitable, that's when you introduce your real capital. There are a lot of funding opportunities available in the market as well. Like we as the company, the Noble Asset, we provide funding opportunities as well. So that if you have the skill of trading in the live market and you have done a lot of back testing and have done a demo trading, then come to us, show us your journals, show us your sheet. We are ready to give you that funding because we know the value of these skills. So focus on the skills right now. Don't focus on the money right now. I'll be discussing about this process concept in the last slide as well. So coming on to the next thing is, what is the attitude that you should have while trading? This was the attitude that you have towards your trading plan and the attitude that you have before trading in the live market. Now let's discuss what should be your attitude while trading. So the first step of attitude while trading is make a trading journal. If you have gone through my YouTube video, you must have seen that I always recommend people to make a trading journal for themselves and note down all your trades while mentioning your trading plan rules as well. Like जो आपने trade किया, you just don't have to mention the figures कि कहाँ entry ली, कहाँ exit ली. You also have to mention कि इस trade में आपने enter क्यों किया, या इस trade से इस time पे ही exit क्यों किया. You have to mention all that as well in that particular trading journal of yours. So once you start trading in the live market, the one thing जो आपको consistently करनी है, that is to make your trading journal. It will help you in a lot of verticals. I'll be making a video on YouTube very soon about the benefits of making a trading journal. So please go through that as well and try inculcating this into your daily habit of whenever you're taking a trade, you are writing down in your Excel sheet or your notepad or whatever way you want to make your journal with. Second is, always believe in your trading plan, and in whatever position you are in the market, always stick to the plan and don't let the emotions change your position. Like in the previous video, I told you, do the back testing, do the demo trading. That is all only because you have the trust on your trading plan. Once you develop that trust, don't let any situation, any social pressure, any emotional pressure affect your trading decisions. Always believe in your trading plan. That's what you should do as a trader. Third point is always remember you can change your existing trades only based on the logic and analysis which you have to mention in your trading journal. If you're making any changes in your trades when the position is already running, you have to make sure you're doing that only because of some technical reasons and not because of your emotions of fear, greed, hope, FOMO, anything like that. And make sure when you are making the trading journal, mention into it that I felt this technical reason and that is the reason I left it, or that is the reason I closed the position. Always make sure you are able to justify yourself whenever you're closing the position, because if you're not able to justify it, understand that there and then itself that it's the emotion that made you take those decisions. So till the time you're able to justify yourself and you think you'll be able to write that in your trading journal as well, don't change. So this is the attitude that you should have towards your trading. And when you are trading, this is the attitude that you should always have. That is, first, to make your trading journal. The second, always believe in a trading plan and your setup and always stick to it no matter what the social or the emotional pressure is. And the final thing is, even if you are changing the position, have it so logical that you can write it down in your journal and make sure there are no emotional impressions over there in that particular setup. So here are some other remedies that I have. See, trading psychology is very person centric. There are going to be different problems that you as a trader have, and there are going to be different problems that a fellow trader might have. But these are the small remedies that I have designed in particular, which is generalized, which can be used by everyone and which can benefit everyone individually as well. But there are a lot of issues that you might face as an individual. That is the reason I take personal sessions as well, so that I can understand what emotional background that you are coming to as a trader and what impact that might have on your trading as well. So if you want, you can book a demo session of mine as well, where I'll help you with exactly what these things are. And if you want, you can have regular sessions with me as well. You have our WhatsApp number, you can contact me on that as well. So let's look into the other remedies that are possible from a trading psychology point of view. The first is, as I was telling you before, is focus on the process goal rather than the profits and the losses. See, this is a profession. Initially, you have to invest time in learning. Initially, you have to grab the skill. You have to understand this process. It is not that quick as many YouTubers have made it, that you can just watch this half-an-hour video and you will be a trader. It is not that easy. You have to invest a lot of time in learning, in practicing, in executing. There are a lot of things that are involved. Try understanding this as a process. Complete it as a step-by-step process. Don't think that you can skip one of the process. Like if you have learned about it, just don't go into the live market without doing the backtesting. That is, you're not sticking to the process. It's like in any degree course, you can't just study the first year and then skip to the third year and don't do the second year. You can't do it, right? Similarly in trading as well, it is a step-by-step process. Follow that process. Don't run after the profits at the initial stage itself. Just focus on the process of being right, of able to grab that skill. That's what your focus should be right now, that you understand the market, that you understand what the factors are, how the market functions. These are the things that you need to understand right now, how to take trades, how to execute them. And once you start learning this, follow the particular process that I've already told you about and stick to it. Don't look at the profits or the losses at the initial stage itself, because if you divert your mindset towards the profits and the losses at the initial stage itself, you will get a lot of impact and you will not be able to stick to your rules or maintain the consistency that is required from a trader. So take it as a process and not a P&L. Secondly, increase your risk incrementally and not suddenly. This is something that I've seen a lot of traders doing, that once you start making profit, you just introduce a small capital and you start making profits, and then you start taking loans from people and introducing that capital because you have that confidence that I have started making profit, I can introduce as much capital as I want to and I'll multiply it. Don't do that, because mentally your brain is not currently equipped to accept that much of loss or that much of profit. Always increase your risk incrementally, that is slowly. If you're taking a risk of 1,000, then don't just jump to 1 lakh. You won't be able to accept the loss of 1 lakh if you have the capacity of accepting only 1,000 rupees of loss. Try understanding this factor. You can't change your brain in just a swift of a second. You have to do it gradually. If you're taking a risk of 1,000 rupees, then, and you are profitable for a long time, like 15-20 days, if you are profitable, then increase to 2,000 or 5,000, not more than that. You have to do this very gradually, then only your mind will actually adapt to it. The third factor is use mental rehearsals to make threatening situations familiar. Always, whenever, like I have given you a lot of scenarios, always imagine what these scenarios are, think about these scenarios, and the important thing is to rehearse what exactly you would have done in that situation. Like I have given you, you can go through this video and see what all those emotions are and how those scenarios are, and think about it, what you would have done in that particular situation. And psychologically, this is a very proven concept where once you rehearse for one particular thing, the next time you are in that situation, even if you're not in that situation, the next time when you are in that situation and you have rehearsed exactly what you will do, then in that situation your mind will force you to do that itself. So it's very important to think about all the worst situations that can happen and imagine exactly what you would have done in that situation, so that the next time you are in the trading floor and doing trading and facing that situation, your mind exactly knows what it has to do and not get into the trap of your emotions. Next is step away from the screen and refocus on what the market is showing. This is really important. When you are in a situation where you're not able to understand what exactly you have to do, just step away. If you're getting confused, where like you are getting mixed signals of buy or sell, you're getting confused what exactly is happening, you don't have to do anything at that moment. You just have to step away from the screen, close the screen, go away, go for a walk, have some coffee, do anything that's recreational to you. You can watch a movie, you can listen to songs, whatever is recreational to you at a personal level. Do that thing so that your mind gets refreshed, and when you get back, you are able to focus again. And trust me, you will see a very huge difference of actually doing just this simple thing, that whenever you're in a tricky or a confusing situation, just close your screen and do something recreational and get back after half an hour or an hour. Whenever your mind feels relaxed, come back and look into the trading. So with this, we come to the end of the session. I hope you enjoyed this session and learned a lot about trading psychology. If you have any question regarding trading psychology, you can ask me now or comment on the video when we upload it. But please try understanding this, that trading psychology is a really important part of trading, and you have to understand it before introducing your capital, before becoming a consistent trader, because psychology and your mindset is the only thing that can make you profitable. As I said, it is the only thing that will tell you how you will be, how well you are going to trade, and what kind of a trader you will become. So with this, we come to the end of the sessions. Thank you everyone for being there, and best of luck for your future endeavors. If there's anything with that we can help you, do let us know. And if there are any questions that you have relating to trading psychology, I am here for next 5 minutes. You can ask me anything you want. I hope you enjoyed your internship, and looking forward to see you as successful traders. Bye-bye.